Basic Financial Information Tips Part 1. Here are some financial tips, definitions, and information that will hopefully help you save money or get out of debt. Saving. Pay yourself first. Start now stashing 10% of your income in an emergency saving. Don't use it for anything but real emergencies. Keep a for sure savings account for yearly expenses you know are coming and you can estimate, for example, Christmas, insurance, taxes, etc. Also have a buy stuff account. If you do, you'll be able to avoid many financial disasters which will face you, and you can avoid borrowing money from high-rate lenders. Borrowing. Don't borrow money unless you are willing and able to pay it back. Failure to pay debts on time causes severe financial, emotional, and family problems. Experts recommend you don't borrow for wants, only for needs, or for things that increase in value. Many lenders will loan you money you can't afford to pay back, especially high-rate lenders. Co-signing. Don't co-sign on a loan unless you are willing and able to pay it back. Often, co-signers end up paying off loans they are unprepared for, and financial hardships follow. Numerous co-signors now have negative credit ratings because a primary borrower paid late. Many lenders do not notify the co-signor before reporting delinquencies or repossessions to the credit bureau. Compare. Before you decide who to borrow from, compare. Find out who is offering the best deal at that time. Look for the loan with the lowest rate, APR. APR. The annual percentage rate, APR. It is the standard rate, so we may compare the cost of borrowing. It is the cost of credit expressed as the yearly rate. When you borrow, always beat 13% APR. Consider 13 to be unlucky when it comes to borrowing. Some have been illegally stating other rates such as weekly or monthly rates. Compare APR to APR. If you pay your bills on time, and you aren't overextended, you can nearly always find loans or financing arrangements at rates lower than 13%. Beware though, because beating 13% does not always mean you are getting a good deal. For instance, the difference in total interest paid on an 11% versus an 8% 30-year, $100,000 mortgage loan is $64,283, assuming all payments are made as agreed. Consolidation loan. A consolidation loan can result in great savings to borrowers if the new interest rate is significantly lower, and if you don't run up debt similar to what was just consolidated. But beware, because consolidation loans usually result in substantially more money out of your pocket into the lenders. For instance, mortgage loans usually involve closing costs. They increase the total debt. Many refinances involve reducing the monthly payment, but increasing the length of payback, which substantially increases the total interest paid. Borrowers who refinance unsecured debt, for example credit cards, into home mortgage, also increase their risk of losing their homes. Also, remember to keep all of your payments current until the old debt is paid off. Too many people have damaged credit ratings and are in bad financial condition because they counted on money which didn't come when they expected it. Expect delays when applying for loans, especially consolidation loans. Desperation. Don't get desperate for money. The more desperate you are, the less likely you are to get a good loan. Auto insurance. Keep your auto insurance current. If you fail to keep your insurance up to date, you could end up making loan payments for years after your car has been totaled. Establish good credit. To avoid bad credit, don't borrow too much, and do pay your bills on time. Inexpensive ways to establish good credit. Inexpensive ways to establish good credit. 1. Obtain a good credit card. When you charge things, pay off the balance each month, on time, and pay no interest. 2. Establish a revolving line of credit, an empty loan, as an overdraft protection against bounced checks, and don't use it as a loan. 3. Get a loan to buy a car, or furniture, or etc., and pay it off within a few months. Late fees. To avoid late fees, which multiply the cost of borrowing, pay early, or at least on time. Repossessions. To avoid repossessions and associated fees, pay early or on time, and keep your insurance current. Extra principle. There's a part 2 for this episode. Stay tuned to get the notification on time. Don't forget to like and subscribe to my channel if you love to make a video like this. Link on the description below. Thank you.